What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 23rd of 2022. Well, folks, I would usually start off my video hoping that you all are having a fantastic day wherever you are. Unfortunately, with the state of the market, I can only assume most people are not having such a good time. And I do want to apologize to you guys. I know I've been absent over the past couple days. Usually, we're the channel to be talking about the market during the downturns. But I've been having a lot of personal stuff going on these past couple of days. So I wanted to make up for it today by doing a really big deep dive and trying to answer a lot of the questions on many of your guys' minds. We're going to be talking about the current state of Bitcoin and Ethereum. I'm going to be talking about what I've been doing during this time. I think action speaks louder than words. Take a dive through some of the more long-term data science models that really give us a good view of where we are, and most importantly, talk about just how bad things can get. We're going to dive into that towards the end of the video, and I think that's a thing you guys should stay tuned for. So we've got lots of things to dive into in today's video right after our quick sponsor. And our sponsor for today's episode is TaxBit. The 2021 tax season is here. When it comes to crypto, dealing with taxes can be difficult, but it doesn't have to be. TaxBit helps you calculate your tax obligations on your cryptocurrency activities by plugging in your various exchanges and crypto platforms. With support for over 481 crypto exchanges, you can track your crypto accounts and wallets with ease. And thanks to the TaxBit network, your exchange likely provides free tax documents powered by TaxBit. If you're interested to learn more, check out the link in the description below and start this year's tax season off with ease. Alrighty, everyone. So before we dive into the charts and start the analysis on the market, I want to go ahead and answer one of the first questions that's probably on your mind if you happen to watch the channel religiously. And that is, Nick, what have you been doing during this time? Have you made any changes? Have you bought any crypto? Have you sold any? What's the current status of things? To be completely candid with you guys, I haven't changed a thing. Haven't been selling any positions, haven't been buying any positions. Of course, it's not a fun time in the market for sure. It's difficult to see your portfolio getting hit, but I've stomached these kinds of storms before, and I've been here a couple of times, not just in crypto, but in equities. And I hope more than anything that can provide some relief to you guys if you've been in the same shoes, wondering about what it is that you should do right now. And look, I can't tell you guys what you should do. And I think that's an important thing we should talk about here, which is that as we go throughout the analysis, and I'll be candid with you guys, I am going to build a narrative that we're not in a bear market. And outside of that, I'm going to utilize a lot of resources to emphasize that point. As I've seen this time and time again, although the market's always changing and there's differences each and every time. But I want to go ahead and propagate the idea all the while that I'm bullish, that for everyone, we're in different scenarios. We've bought different coins and tokens at different prices. We have made certain returns or losses, and it's on money that might be money that for some of us can be thrown away and you would be totally fine if you lost it tomorrow. And on the other end, it could be money that is essential for your day-to-day life and for your future. And perhaps you might have taken on too much risk, right? So no matter where you stand here, you're going to have to make that decision for yourself. But I would say that if you're in a position where every single day you're watching the charts and it's keeping you up at night what your portfolio is going to be, perhaps you've made some great returns or you've started to take a loss on money that's very important to you. There's nothing wrong with taking a bit of chips off the table. I don't care how bad inflation is. I don't care how great the returns might be on some cryptos. Consider taking some off the table and treating yourself, making sure you've got money parked away for your future and the things that you really care about. That's not a selfish thing. That's a smart thing to do. And everyone in the market has the ability to do that, from not only the investors in the market, but also the founders and other participants in the market. So I think that that's a very important reminder to you guys, and I hope more than anything that kind of sparks us off on a good tone here as we dive into the market. Now, I do want to talk, though, about why I haven't really done anything and why I really think that all the while in the market, yes, the sentiment right now is brutal. People are not confident in crypto right now. People, of course, as with every 50% plus drawdown in the market, and again, the consolidation sideways that persists probably for the next coming days, weeks, and potentially up for a month to two, people are obviously not happy. But if we take a look here at the long-term chart, and I want to go ahead and actually take a look at the 2-week view here, just to simplify this, we can see something quite interesting. We're right about where we've been since the start of the new year. And this kind of sideways consolidation here for Bitcoin's price, right? Now, All the while, this is obviously a period where most people are going to be fearful. And to be honest, no matter if we understand rationally this would be a good time to buy in, your emotions are completely justified, guys, if you're feeling that way. It's how most people feel during a 55% plus correction in the market. But I want to go ahead and take a look at the long-term timeframes and talk about what is indicative of an uptrend. What is indicative of a bull market? And I think that that's the thing we need to consider here, because if you're holding positions at the moment, again, your time frames might vary, but I think the vast majority of us are investing in crypto for what may be for the foreseeable future, because this is money that we have that we want to invest and we want it to grow. And if not crypto, we're probably going to look elsewhere. We're going to invest in stocks. We're going to have it in cash waiting for the next buy opportunity, right? So that's the mentality I want to focus on here, because if you are in those shoes, I want to go ahead and ask an important question. First off, if crypto is showing enough of a significant trend that it could continue and still be in a bull market, and on top of that as well, if it isn't, even if it isn't, do you have a better place to go to at this point? And I'm not meaning that it's an insulting question or like a harsh question, but it's an important thing to think about, right? So let's go ahead and focus on this. First off, is crypto potentially still in a bull market or bear market? Well, I understand it's very easy when the market draws down 55% from its previous all-time highs that everyone says, it's either a bear market because it's down 20%. That's more of a definition in traditional equity markets for a bear market, just my candid opinion on it. But outside of that, a lot of people would say, of course the market's down, sentiment's killed, prices can't go up from here, right? We're clearly in a bear market. Now, all the while, people have made those claims. What really defines an uptrend or a bull market? An uptrend is defined by a pattern of higher lows and higher highs. When price, generally speaking, over a certain time frame, whether short or long, is showcasing upward momentum, right? Now, I understand if you take a look at the short-term time frames, right? Whether if you're looking at the hourly chart, the 5-minute chart, or even the 4-hour or daily chart, people can start to take that statement and they think, we've been going and having lower highs and lower lows, indicative of a downward trend in this case. Therefore, we're in a bear market. And that's not entirely true. What really matters is the longer time trend and whether or not we have the ability to have another midterm uptrend. So we focused on this on the channel before. We talked about the uptrend out of the consolidation period back here from 3 to 14K. We talked about the rally here from around $10,000 for Bitcoin's price all the way up here to 65K, right? Some major cyclical moves. Now this is all within one bull market here. And during that same cycle, we also had intense corrections, right? We had the correction back here from 14K down to the $3,900, $4,000 range during the pandemic sell-off. And we've also had some drawdowns here during this consolidation period, right? So we've clearly got some signs here that the market goes through pretty intense corrections during a bull market. I think people wouldn't argue that this was a bull market and this was a bear market. It was a mid-cycle correction. And I think that that's exactly what we're going through now. Now back to our point here about what's indicative of an uptrend and shows signs of confidence. We don't need to look at any indicators or data science models. All we got to look at is price. Because all the while we don't know who's buying and who's selling, right? Maybe we can do some on-chain analysis. What we generally know when we take a look at the market is, hey, no matter who they are, where they're coming from, are buyers buying it at a higher price than they were in the past? And on top of that, were they driving price higher than they did in the past? Everything in price now is showcasing a degree of confidence. It's showing it slightly, but consistently. And the reason this is important is it's because it's showcasing that when the order book gets to a specific price range, right, that's higher, right, when the bids and the asks that are basically limit orders waiting to be filled in the order book, that eventually market order flow is buying into those asks on the order book, the sellers who want to sell at a specific price at a higher range than before, right? They're paying a premium every single time, whether it be the lows or the highs, And until this is really significantly broken, there's really not much cause for concern. Everything in the middle is just chop, right? In my opinion, that's generally how some traders who view these long-term time frames look at it. Now, if you want to take another look here, again, take a look at Ethereum. I know Ethereum's been scary, it's been pulling back here. Yes, it's had a significant correction, just like it did back in May, or what it's done in the past. But I want to go ahead and focus on not only, again, the dollar pair in this case, ETH/USDT. You can see you're continuing to set in generally higher lows here. But more importantly, let's take a look at the ETH/BTC ratio. This is something that's very significant to consider here. Let's turn off our drawings here. What does price tell you here? Sure, the highs in this case were kind of consistent the first two times around, right? Then we had a higher high here. But look at the lows here. Consistently higher each and every time. Ethereum outperforming Bitcoin. Now, I can tell you all that one of the dead giveaway signs that we would be in a bear market or would be entering into a period of stagnation would be Ethereum losing against Bitcoin. The ETH/BTC ratio going down over time. And we have not seen that trend break yet. Those would be one of the giveaway signs that we should pack up our bags and probably consider looking the other way. It's not a guarantee, right? I don't want to spook you guys, but I just want to say that if we utilize like a list of indicators or different metrics we can observe, that would be one of the things that would give me a bit concerned that the trend might actually be ready for a period of stagnation. And it might be ready to kind of step away, right? Not an ultimatum, but definitely something to consider, right? But again, we've been seeing these higher lows here. And on top of that, this is really interesting because we reversed a trend of resistance here, right, at these previous highs that has now turned into new support. And that is, again, another sign that the markets are setting up for a big move ahead, probably to the upside, if resistance has been turned into support. It's the new foundation for price to move forward. Now, on top of that as well, if you want like a broader outlook on the market, I understand some altcoins, guys, have been hit pretty brutally over the past couple of weeks or months. Everyone's in a different position. Some altcoins do really well, some altcoins aren't, right? But if you look at altcoin dominance, still holding 57% of the market share. And still looking like it could very well play into our cards here of this trend where we get at least one or two continuous rallies in the altcoin space. One final blow off top in the market and one here going into Q2 of 2022, as we've been talking about. Okay? It doesn't seem so far-fetched when we take a look at history and we see what it's done here in the past. Now, I want to go ahead and take a quick look here through some of the kind of mainstream data science models, or at least the means of kind of measuring Bitcoin's price, and also looking at sentiment. And then finally, we're going to talk about the important thing that I really want to share with you guys to be prepared for and have the stomach for if you're investing in crypto markets. So here, for example, we've got the logarithmic growth curves. Again, similar to the stock to flow, from my understanding, this is a form of regressive analysis, right? Now, just to put it into context, this is taking a measurement of the Fibonacci deviations here and basically using regressive analysis on previous price to project where price might go in the future according to history. Right? This is very similar to the stock to flow model, how it does change over time. The projections change depending on previous price. Now, what I think is really good about it, looking at it here, is that it showcases here a really good set of consistency within Bitcoin's price over time. And on top of that, gives us very reasonable projections here as we go into the future. So for example, I'll see if I wonder if I can move or shrink down. There we go. So it's not going to give us the values in the future up until only like about June here. But the important thing I want to consider here is, again, looking at this model, this is very much in line with where we could go to, somewhere around 150K, 200K in this cycle. Again, with expanded time, something that we've drilled here on this channel. And we're very contrarian against a lot of people on the idea of the expanding cycles, how it takes longer to realize these kinds of returns each and every go around when it comes to a bull run for Bitcoin. And on top of that as well, we're really hanging here on the low end of the oscillator here, right, where price stands in between these different bands here, the lower band and the higher band, right? We can see here historically, right, that generally speaking, each cycle top here has come in with a top around this 1 point range on the oscillator. We haven't seen that yet. And again, we can also see here in cycles that it's not only just a clean parabolic buildup like it was in 2017. It's a big misconception. Sometimes we have very inconsistent ones where we get above this line, we pull back down below it like in 2013. We have to consider here as well, again, that concept of expanding cycles, how it's going to take longer to reach that target range. And we're not expecting that we see a cycle top until somewhere, and I would give a month benefit in one way or the other, shorter or longer, that we expect, according to the expanding cycles, that it's going to be about until November of 2022 until we see our cycle peak. It's only, in this case, about 9 months away. Less than that, as we're going into the close of February. I think it's totally doable that we see something like that soon, guys. When Bitcoin gets moving, don't know exactly when it'll be, but when it gets moving, it's got the potential to do this. And again, going back to price here, as we've discussed, I think it's on this chart here I could show you guys. We've talked again about this idea that we've been going through a long consolidation period, or we had a 70-week consolidation period here from the relative highs to revisiting those relative highs. And I think this go around, we've easily got a 60-week consolidation period. We've only gone through, just to put it in perspective, 46 weeks since we set in this technical kind of high here before the consolidation period, right? So we've only gone through 46 weeks. We did 70 weeks in the past. We got to be able to stomach and wait around until price continues on the shorter time frame to maintain consistent higher lows, higher highs, get us back up there, and see what happens when we try it for the third time. Perhaps the third time is the charm here. Now, before we walk into that potential setup here where we have a 200% rally beyond those previous highs, again, just to put in perspective, it's not asking for much. We had, for example, a 378% rally here, and back here from the lows, we had a 362% rally. Not asking for much, especially for a blow off top where the momentum is really strong. Putting all this aside, this is the optimistic layout here, and I think that we've got the setup for this. But I want to go ahead now and talk to you all about what we need to be ready to stomach. Something that could very well play out here, because the macro environment right now, the sentiment, not just in crypto, but in asset markets as a whole, is generally pretty negative. People are taking the Fed's word at face value and believe that the Fed is just going to rush into quantitative tightening, reducing its balance sheet extensively, that it's going to spike interest rates, even though interest rates, especially at these low levels, and increase really don't affect asset markets according to history, especially not crypto. But I want to go ahead and focus on the technical pattern everyone needs to be prepared for. And it's something we have, again, we're a bit different here than most in the YouTube space when it comes to analysis, because I have a traditional background in equities before I invested in crypto. And I try to learn from equity markets, from what we can apply here in crypto. And one of the most important technical patterns here that I think we need to consider could play out is the long-term multi-year pattern that the S&P 500 had back during the 90s all the way here into 2013. Multitude of decades here, okay? Now, what is this technical pattern? This technical pattern encompasses, on a much longer term time frame, what we think is going to be compressed here within this bull market for Bitcoin. The dot-com bubble, the pullback after the dot-com bubble, the rally into the housing bubble, the housing crisis, and the revisit here, the third time of revisiting those highs. Now, before we dive into what happened after this, I want to go ahead and focus on the short-term price. The first thing to notice here is that we had relatively consistent highs, one slightly higher than in the past, right? Just exactly what we saw with Bitcoin, right? Going from 65K to around $69,000 for the second time. And then on top of that, we not only had a revisit down to these lows, but we even for a short period of time came down below that range. Now, the major thing I want to emphasize here is the potential for a supposed fake out. That's what this is. When prices start to go below the previous low range of another cycle or another rally in the past, right? And I don't want you guys panic selling. I don't want you guys getting liquidated. I don't want you guys doing anything really foolish that could end up costing you everything at this price range. Because historically, buyers come in at these kinds of ranges, the range in which we're at now, and maybe a little bit lower than where we are, maybe down to 30,000, and yes, potentially a quick sell-off below the $30,000 range to 29K, 28K. Because after that, not only did the S&P 500 over the next few years trend back up towards its previous highs, it went on to have the strongest uptrend it had had in centuries. Okay, sorry, let's say decades, right? You can even take a look here at the log scale. This is an incredibly strong trend, one in which they could only be matched during the 80s up into 2000. I don't want you guys to get too caught up in the short term of the market. I understand it's difficult. And many of you, I think, are probably holding out strong. If you're still here in the market, give yourself a pat on the back, right? And no matter if it turns out to be the right play or not, guys, the conviction to be able to look at the long-term time frames, to stomach volatility, is essential investing in exponential markets like crypto. Now, I'm not saying crypto markets are going to 100x overnight, that we're all going to be millionaires and billionaires. I think all that froth gets washed out, and you should ignore people like that during the euphoric phases. Find solace in the people who keep you grounded during the good times and the bad times and help you to focus on the long-term uptrend. And I hope more than anything, I can help you guys with that. I'm not perfect. We make some great calls here on the channel. We also make some bad calls. But more than anything, I do believe that we do a great job of focusing on the long-term trend and making sure we don't trip, making common mistakes of selling too low, buying high during euphoria, letting our emotions run over, trading on leverage, all these different things that can be disastrous and end up causing more emotional trauma than the market itself with its volatility. Right now, guys, crypto is a market, and I'll make sure I can get the actual metric here. We can pull up the total market cap. And crypto's sitting around 1.7. Crypto right now is at a $1.7 trillion market cap. It can look shaky sometimes, and crypto has no shortage of volatility, that's for sure. But I want to go ahead and just emphasize how far things have come, and with a market that's at a $1.7 trillion market cap. Again, that question we talked about earlier about what other place do you have to be, right? That's better than crypto, because equities at the end of the day are not going to double in the next year or two. They're just not going to. Crypto, on the other hand, can not only double, it could triple in the next year or two. And if we look at history, 50% corrections, whether you do enter into a bear market for the next year and continue to decline a little bit, or if this isn't a bear market, which I think is the more likely case, this is usually the time to get optimistic. It's the time to get greedy in the market, to get excited, to take on risk. When the market has entered into a discount, it's just like when you go shopping. You want to buy something at a discount. You don't want to buy it at all-time highs. I'm right here with you guys during this, through good times and bad. And I do believe with my money, I'm going to put my money where my mouth is, my actions, I hope speak louder than my words, I'm confident. I don't feel the need to sell. If anything, I'll wait for better buying opportunities and average in. And if the trend continues to remain strong and we get higher lows and higher highs, I'll buy in. Until the Fed really pulls the switch. Until there's a reason to not be optimistic about crypto, there's just no reason to sell. Price action is on our side. Data science models are on our side. We just got to keep a longer term time preference and set our expectations at a rational level. And that's where I've seen a lot of people struggle sometimes. To no fault of their own. It's just how the market can have an effect on all of us. So anyways, guys, I rambled on a good amount. If you made it this far, I'd only ask that you drop a like if you enjoyed the video, leave a comment on your thoughts, whether you agree with what I had to say or disagree. Love to hear what you guys are thinking down below in the comments. And if you enjoy this kind of analysis, one great way you can support the channel is through the Dash Report, which you can find down below in the description. It's a newsletter that we write. You guys can follow what kind of trades that I'm making in the market. You get a report in this case where we dive into crypto markets, equities, Forex, commodities, the whole shebang. And, if you can tolerate me rambling like this on video, perhaps you can tolerate my rambling and my writing. Anyways, guys, thank you all so much. I hope this video proved valuable for you, and I wish you all a wonderful rest of your day. Stay safe, trade smart, and I'll see you all in the next video. Take care, everyone.